And welcome to The Bottom Line, where we dive into some of the main business and economic stories of the day. Foreign direct investment has played a key role in Poland's economy over the last few decades. According to a recent report released by the Warsaw School of Economics, FDI has brought in 40% of added value to the country's economy. To discuss where this is heading now, I am joined by Professor Eliza Przeździecka of the Warsaw School of Economics, who actually co-authored this research. Good afternoon, and thank you very much for joining me.
Definitely.
To begin with, I actually wanted to touch upon Mario Draghi's report, which came out yesterday. And I wanted to ask you about how Central and Eastern Europe should actually address the issues stemming from the challenges that were raised regarding Chinese investment in Central and Eastern Europe. We know that in Hungary in 2023, actually 44.3% of Chinese investment was actually funneled into Hungary when it comes to Europe. And this is a statistic that was addressed by the Rhodium Group. So I actually wanted to ask you, in terms of your opinion, because you do a lot of research in this area, how those issues should actually be addressed in terms of Chinese investment in this part of Europe.
It's another external source of capital, which is very much needed in countries as Poland as well as Hungary. However, Central and Eastern European countries are very attractive for all foreign investors from all over the world, including the US or South Korea, no matter where they are coming from. This region is very significant for the business in terms of a location and the very good access to the EU market, with all of these advantages in the very first point, including demand. So in terms of the Chinese capital, this is a very interesting situation what we have right now, because China has is facing with significant barriers in terms of trade. So actually FDI is a good alternative to trade, as there are barriers. Then investors are planning to establish their business in the countries where they want to take the market and attract consumers with their products. So this is one point. Another is the fact that China, after the decoupling to the global economy, specifically to the American market, is now focusing its interests to Central and Eastern Europe. However, in terms of Poland, there is less than 0.5% of the entire foreign capital invested in our country coming from China so far. So it's not a very significant footprint from that country and this group of investors.
And in terms of the issue of FDI and the coordination of EU governments, because there was a lot of that in Mario Draghi's report, that there should be more of a coordinated policy. Do you think that there should be more effort put into coordinating our efforts as a region, as the EU as a whole, in terms of actually creating some more coordinated effort, more of a policy, working together on an industrial strategy?
Yes, in terms of industrial strategy, for sure, taking into account also the new approach to industrial policy implemented by the EU entire, as the group, as the integration of multiple countries and economies. On this field, I would stress that Poland has a very great position in terms of establishing its specialization in the high value-added industries in the very near future. We do have lots of advantages in terms of attractiveness and in terms of the new interests of investors, which are now seeing this location as a very attractive for the further business. However, the coordination is the good term for that. I would like to be far away from the intervention or any protectionism in terms of the flow of capital, taking into account that the market is the best way to check effectiveness in the long term and to have a good verification for businesses in general.
Speaking of verification, in recent weeks and months, we've heard somewhat worrying news, shall we say, of foreign investors shutting down their production lines here in Poland. To begin with, we actually heard of British NatWest closing operations in Poland by the end of 2025. Just earlier this week, we've heard of Beko closing in Łódź. Earlier today, we heard of Hurlitz Pelikan in Baranów, and also Michelin tire production is also moving out of Olsztyn and into Romania because of the costs of operations here in Poland. Would you be able to comment on that? Is Poland no longer a cheap investment market? What does this signify? Is this a worrying trend that we should be expecting more of?
Poland is no longer a cost-attractive location for foreign capital. However, there are more and more other advantages in the market, like highly skilled labor force availability, which actually point out this location, our country, as the most attractive on the list, together with Mexico, Brazil, Saudi Arabia, including the European countries such as Hungary and Romania. This is the top of the list of the most attractive foreign direct investments location indicated by Financial Times in their annual report. So cost is no longer our advantage, or for more and more cases in terms of a greenfield investment, investors are seeking other advantages, or they are looking at our country as a basis for the further business, which may find here very good, attractive opportunities for further business, for further development based on the location, as I said, and internal demand and the access to the EU market. And we do have such a significant disadvantages coming from the cost of labor, for the very first point, which actually is driven by the minimum wage, which raised by over 40% for the last 2 years. Also, a very significant cost of energy and energy transformation, which actually is a very significant, very important signal for investors, which drive the energy-consuming, energy-intensive industries and the manufacturing processes. So we do have many advantages for the value-added industrial manufacturing, as well as services based on a highly skilled labor.
And the data presented in your report shows a steady FDI increase all the way from $4.4 billion from 1996. It's very, very steady, even throughout the pandemic, up until 2022. And this year we see a drop, as slight as it may be, but there is a little bit of a drop. Is this a trend that we will see from here onwards? What can we expect in the next few years?
Absolutely, it's not a trend of a decrease, and such a very slightly reduction of this amount in terms of an annual inflow is just the effect of the last 2 years before 2023. So starting from the post-pandemic time, we recorded very enormous amount, which was nearly doubled as the regular in the previous decade. So I think the last years really show that the advantages of Poland are still very important for foreign investors, for all of those which develop their business as the reinvestment position. This is over 70% of a total increase of inflow of foreign capital, and including these firms and the companies which are still seeking a proper location in Central and Eastern Europe.
And what is it that makes Poland so attractive to investors? What keeps them in the region?
The availability of skilled labor force, again, this is one of the greatest advantage, one of the biggest our asset, what we can bring and we can give and offer to new business. the location, very traditional argument, very traditional element of assessment, but this is very strictly connected to our membership to the EU and the access to the EU market, which is not comparable to anything else in terms of the demand, internal demand, and the consumption. And last but not least, our position here as the hub, transportation hub, and location in this part of Europe, which actually gives us the very good position in terms of having centers for expansion to the rest of this continent, to the rest of this region.
Okay. Eliza Przeździecka, thank you so much for joining us this afternoon.
Thank you.
And that was Professor Eliza Przeździecka of the Warsaw School of Economics joining us today on The Bottom Line. Thank you so much for joining us on Business Arena. I was your host, Marie Cato. Join us again tomorrow at 5 p.m. CET on TVP World. For more business stories, check us out on X and on tvpworld.com. Coming up next, World Talks. Goodbye.